Yo, what's up guys? This is Sean Tan and today we're gonna talk about refinancing. Before we talk about refinancing, there is something that I wish the audience would really take note of is actually CCRIS and CTOS report. These two reports actually indicates the health of your financial status, whether the bank is going to loan you money or going to give you money to play with or invest. It's all boiled down to your payment records of CCRIS and CTOS. So the difference between CCRIS and CTOS is the source of information. CCRIS actually acquires data from the banks, the more formal one, and CTOS sometimes involve utilities. So let's say if you owe the utilities for 2 months for a data plan that you forgot to pay, and when you ask for a loan, the bank would reject you because that report indicates that you owe the particular vendor 2 months of payment. This involves PTPTN, this involves credit card payments, this involves housing loan payments. So my refinancing attempt failed recently because of 2 months outstanding payment that I didn't pay because I forgot. Because I set it in standing instructions but it didn't go through and I got rejected. And also refinancing, there's two ways. For example, I have this particular housing loan with this bank. Let's call it Bank A, okay? Bank A provided me this housing loan and I wish to refinance it to Bank B. That is called a refinancing. So if I were to do like let's say I really like Bank A and I want, let's say now I have 1 million of a housing loan with this bank. I want to refinance it again with Bank A. That's called a restructuring. And restructuring seems to be a big taboo in banking, where it indicates in your CCRIS report, back to the CCRIS report, restructuring indicates that you have a problem of your financial health, but refinancing doesn't. So there's no point being loyal to your financial institution or your borrower. Refinancing is an excellent tool to raise funds or capitals if you really know how. Let me explain. So a technique that I learned, which is like when I am 23, I bought my first house, which is 300,000, okay? Then 4 years later, when my income grow and the value of my property grow to, let's say 400 to 500,000, let's say 500,000 for ease of calculation. Okay, 500,000 now, I would like to buy a new property, right? But I don't have capital. So 500,000 I can refinance it that I can take out 90% of 500,000, which is 450,000. But I already clear up maybe 10%, 280,000. So 450 minus 280, I can take out 70,000 and I can use this 70,000 to actually get a new property. And the best thing about this is that this property A is actually rented out. Okay, so for 300,000, it was rented out for 1,500. So I was making money back then. Then now at 450, maybe it's not making money anymore, but rental will actually adjust itself according to market. So at this particular property, it's adjusting itself very well. So I'm actually breaking even for my rental, and the other side, I get cash, I get credibility to get on and further invest in my real estate portfolio. But please don't use it for leisure. Of course, all this is still boiled down to whether you have the financial capabilities to pay back, because it's still a loan, right? It's still a loan. But housing loans has one of the lowest rate besides PTPTN. Housing loans is one of the lowest rate, and it's a more viable loan in comparison to personal loan. Of course, there's other ways to use refinancing. Like my case, I bought a house, I was innocent, I was ignorant, I choose to pay and settle the loan for 15 years. 15 years, where the installment amounts becomes like a mountain pounding on me every single month. Therefore, now I'm in the process to actually refinance this loan into a 30 years loan. Like maybe, for example, I bought this house at 1.5 million. 5 years later, now I only owe the bank 1 million because my loan period is very short, 15 years only. So now 5 years later, I only left 1 million. So I want to reduce my monthly installment amount. Then I choose another bank, which is Bank B, to refinance only the outstanding, which is the 1 million. So I can drag this 1 million amount into 30 years again. A thing to note that refinancing requires fees. Bank's fees and the re-stamping of your loan agreement and all other documentation requires fees. So you need to put that into the consideration when you actually proceed with refinancing. Processes are very similar to getting a housing loan. You can go to any banks and they will be so delighted to serve you because it's part of their business schemes lah. And don't worry, you just need to prepare all the standard stuff. There's already a template like your monthly statement, your KWSP statement. You have any additional income from your rental. You just need to prove your income and your ability to pay. So then the banks will love you, and I think that's all for this episode. Until next time, I will see you guys again. Like this video if you like it, share it, and if you really are interested for more information, hit that subscribe button, and I will see you guys soon. Ciao.